Hello, fellow traders. 'Tis I, the Rumpled One. It's Friday, July 13th, Friday the 13th in the year 2018. Let's talk trading, weekly wrap up. It's been quite the week, hasn't it? And hopefully you used your money and risk management the whole time. Looking at the monthly, we can see we had a big, huge run up. The yen. Right now we're sitting at 112.39. We're 41 pips off the daily high, making a new daily low, a pullback here. But you can see we hit 112.79, almost 80. And we're 143 pips above that monthly high right now. Anybody who took that breakout, you had a great trade. Weekly, ditto. If you took that weekly breakout, nice trade there. Once again, such simple trade, just trading with the candle color at the horizontal line. And for those of you just tuning in at the end of the week, all the Sunday, Monday open gaps filled. On the daily, we broke out of the high to make that new monthly, weekly high, and then we came back through. And we came through that wick zone. So anybody trading that wick zone, you got it on both sides. The range, though, it's kind of interesting. So far, only 44 on the yen, and we've only got 3 over 100. So maybe that's just Friday. People taking a rest from all the action. Buy zone traders, profit here, profit here, profit here, and a scratch trade. And you see right here, that short, you probably would have stopped out either here or here. And here you go once again, heading towards that pivot. You should have, if you went short, right there was your key to exit. Look, using that wick, it came back, went through it, and came back. Just punch out, take those pips off the table. Once again, simple stuff. And you can see rat zone, not much separation. 43.5 pips of range, just not much in terms of the rat right there. But you could have been taking the rat reversal trades in and out of the zone here. So you can see here, green candle closes, red candle closes. You go short right there. Or you can do the continuation trade, either one, the turn or rat, turn trade, then continuation, or rat reversal. Right here, we've got a red candle close. We got a green candle. So if you want to look to go the other way, there you have it. Once again, missed the pivot, missed the pivot, missed the pivot. And you can see right here, we've got 3 missed pivots this week. This one might get taken out today. We'll have to see about these other 2. And good old price action. 3 ball at the line, monthly, weekly high. Right there, 3 ball. Red candle at the line. Now we've got a 1 ball. And you see it went green at the, or that's a 2 ball rather, not a 1 ball. That's a 1 ball. You see it went green at the line. You'd be up about a pip or so right there. Using the 5 lines from the previous daily session, high, close, mid, open, low, just trading the H1 candle color at the line again. I know it's a broken record, guys, fellow traders. I know, but that's what good trading is. It's like a broken record. You keep doing the same thing over and over, making profit. If you're not making profit, then quit doing the same thing over and over. I think one of the topics this week was actually, it was 2 days, I believe. I talked about trading like it's a business. And if you're not trading like it's a business, then were you trading like it's what, a game or just fun? I mean, there has to be some discipline here. So make sure you have that discipline. Wick zone, price doesn't like staying in the wick zone. You can see it every day, every day, every day. Knowing that you can exploit it for profit. And remember, I said yesterday trading is guessing. Well, that's really what trading is. It's guessing. And this is an educated guess, or calculated guess or risk, that if price gets in here, chances are it's going to leave this area, either to the upside or to the downside. So you see here it went a little bit, and once again, just using that rule of thumb, if it breaks below that previous wick, just scratch the trade. I mean, sometimes you get a lot, sometimes you don't. There's just no reason to take a loss when you could take a very small gain or just a scratch. And that's just something most traders are they're not prone to do that, because maybe they're long-term traders, or maybe they see all these other people making these 400 pip trades. I've never been, actually I was lucky, so lucky one time. Oh wow, this was a long time ago. It was that night I was up because I was in I think it was the Swiss franc, and I was short, and it was running against me hard. And then the Swiss franc came out, the bank came out with something, and the sucker dropped 500 pips. I saw my red change to green, and I punched out so quick it wasn't funny. But what was really funny was I had my take profit in. So I had punched out manually, forgot all about the take profit, but because of the platform, it was just basically a buy order. And so it triggered the buy order, and when it went the other way, I got profit, on the drop and then on that bounce. So, I got totally lucky there. It was total luck, incredible luck. But I've been on the other side of the luck too. But once again, you have to have a plan. You can't really rely on getting lucky all the time. So you take these calculated risks, these calculated trades based on statistics, and you see what happens. But you just don't know. I mean, once again, if you were short here, live example, you saw what happened. It went down. It just scratch the trade, or take the profit right there. If you had taken that short, that's a nice profit. That's about what? Oh, let me remember how to do this. Let's see. You click that. You hold down the mouse. Put that right there. Yeah, that's about 15 pips. That's not a bad trade. Once again, if you're, watching those people out on various trading forums brag about their 300 pip trades, well, yeah, that's nothing. But for most of us, we'd be happy. Holo setup right here. There you go. See it put in that lowest open, came down, hit it, and you're about 5 pips to the good. And you can see that happening right here, where we have the bid. The green line is the valley of the ask. That's the lowest ask at the time. You see here. So now it crossed over. And so for those of you just tuning in this indicator that I wrote, the tick chart, I put in a couple other things. You see, when the bid runs above the lowest ask, then that line stops moving, and then you see it starts to put in a higher bid line. And now if this ask drops below the highest bid, the peak, what I call it, then this line stops moving and this line comes up. And so that way you can track, is price going up or price going down? Because to me, price can't go up unless the bid goes above the lowest ask at the time, and price can't go down unless the ask drops below the highest bid or the peak of the bid at the time. And it seems to be paying off. Once again, does it work each and every time? Because, you get some oscillations every now and then, but if you use this with another method and use this for your timing, you see very little drawdown, and you can definitely rake a few pips if that's all you're after. A handful of pips, it works, but you don't really use it standalone so much. You use it to definitely trade off of the reversals, or if you're looking at a breakout situation, because you hate to buy a breakout and then all of a sudden you can see price go below that peak. And the inventory reduction bars, you can see here we had a short there, a short here again, and this was the long trigger right here, and you see it already broke out there. And just the daily, weekly, monthly, open, high, low lines. Once again, using H1 candle colors, you can see what happens at the various lines. And you're using today's and yesterday's. Oh, and in case you're wondering, I just used 5 instances of the HL5 indicator that I put out there. And so like you have the 1 day, 2 bars, so you get the current and the previous. And that's how that works. Finally, Einstein lines, once again, relative to when I opened up this portfolio, meaning in MT4, I'm not talking about my portfolio, I'm talking about this group of charts is called a portfolio. And so when I opened it up right there, the Einstein line started. You can see we had a move to the downside. And once again, you can see here, price started coming back. And so right there would have been a key to exit the trade, just like right here. You can see price went up, barely touched that, and starts coming back down. It's just scratched the trade. Yeah, it could go back up, but you don't know. And see, looks like maybe it goes back up. Nope, maybe it goes down. See, you don't know. That's why I say trading is guessing, and I know I catch a lot of flack for that, but even with all the statistics I run, every time I put on a trade, I know I'm still guessing. It's still a guess. It's calculated guess. It's calculated risk. And I know I'm beating a dead horse or beating it into the ground, but I guess I want to beat it into your head so you really realize that trading is guessing. Doesn't matter how much research you do, it's guessing. Unless you can manipulate the market, you're guessing. And any trade can go for you or against you, but it's that series of trades is what you're looking for. So, fellow traders, I hope you had a really profitable week and month so far. Be careful out there on Friday the 13th if you're superstitious, but always remember, never forget, it's not what you trade, it's how you trade it. TheRumpledOne signing off. Let's go drain the banks.